So now going on how to invest. So this is with general investing. So I'm a big believer in active money management, and I wasn't before. I used to be into indexes, but I don't do indexes at all. I don't recommend indexing at all, aside, if you've never invested money before, then pop it all into an index or pop half of it into an index. That's a good philosophy of way to get your money into the market very, very quickly without any thinking whatsoever. QQQ is one. You can do IJT is another index that I like that one quite a lot. I might recommend ARK Invest. Most of their indexes are pretty much growth stocks, so I like that. But indexes as a whole are a pretty terrible form of investing. It's good to get out of the mindset that 10%, 20% are phenomenal rates of return. And it's good to have the mindset that, 3x is phenomenal return. 10 to 20% is whatever, and 0% or losing some money is a very normal occurrence or something that can happen. So when you want to do active investing, I mentioned before in another video that you kind of are thinking 50% cash, 25% growth, 25% volatility trading. That's a generic form of an active investor's portfolio that I may recommend. And with that growth, that 25% in growth, that's really what you're focused on with active investing. Volatility investing should just be mechanical. Up 10% you sell, down 10% you buy. It should be quite mechanical. Value investing, you're just waiting for the big crash. When the S&P goes down 25%, boom, all your cash goes into the market, something like that. That's value investing. But then with growth investing, this is where a lot of your time and effort comes in, and your smarts. Growth investing, Tesla would be a classic example of a growth stock that was stagnant for 3 to 4 years with virtually no escalation in the valuation of the stock from $200 to $500 or $400 maybe, 2 to 400. It just bounced back and forth for 3 to 4 years. And then all of a sudden, overnight, Tesla goes up to like $2,000. That happened in like 1 year. But Tesla is a classic example of a growth stock. Bitcoin is another example where Bitcoin went from basically flat for 4 years at roughly $1,000, and then it went from $1,000 to like $10,000 to $20,000 in about a year. And that kind of 1,000% rate of return is what you might expect from a growth stock. With the other thing that you want to consider with the growth stock is that it might take 2, 3, 5 years before anything happens whatsoever. And the reason that it can take so long for the market to react to good technology, to good changes in the ecosphere, just ignore why it takes so long. We could go into that another time, but just ignore that, and then just accept that the market price of something that is new and growing is not reflective of the actual value of a thing. So a good idea is a PE ratio of 50. I'm just going to throw in a PE ratio of 50 or higher is what you want in a growth stock. Obviously, it's infinite PE ratio when things are losing money, like Facebook and Amazon were losing money for years, if not decades. So their PE ratios were infinite. But Tesla might be approaching a PE ratio of like 100, 200, whatever. And that's the sign of something that's kind of a growth stock. So when it comes to growth investing, there's 3 things that I look for personally. I look for something that people are socially involved in, which I think people are involved in anti-Fed or against the inflation, against inflation. People are actively involved in investing. And then another scenario is like people are actively involved in the climate change stuff, and people drive cars. So while these things might sound obvious, there's certain companies that are business to business and certain companies that are business to consumer. And for a growth stock, I much prefer things that are business to consumer, where the consumer can become a little bit overly impassioned with saving the environment or globalizing money, as opposed to things to where it's simply an economic equation, like selling guitars at like a $10 cheaper value. That's purely economic, whereas these other things have a social cause of some sort. And then another thing that I look for in growth stock is something to where the world is changing. So largely you can say anything that the government does, a competitor is going to come in and take it over. A great example of this is Robinhood. Robinhood basically made it incredibly easy for people to buy and sell options, whereas for government reasons, it was practically impossible for the commoner to buy and sell options before Robinhood. The people in the tech world call it democratization, but let's just ignore the kind of the virtue signaling type of talk, and just kind of think about it like the government put a regulation on this. How do you get along? How do you avoid the regulation and then invest in that company? So the government has a regulation on banking. Bitcoin kind of avoids that regulation, so that's one reason to invest. The government subsidizes oil companies, and then Tesla, the clean energy, they subsidize clean energy as well, but Tesla kind of gets around this, and there you go. The Tesla has an absurd amount of negative press compared to oil companies or car makers. Absurd amount of negative press, and that's because these old incumbents, even though they're not technically the government, they're sort of too big to fail, as people say, and they have they're entrenched everywhere to keep out competitors. So whenever a competitor comes up, it just destroys them entirely. So you can think of some other areas where this is coming up in the near term, and one of those areas is schooling. Public schools are trash. Universities are a waste of money. And you'll see in the next 5 to 10 years that you'll see online virtual schools, some mix of a daycare system. I don't know how they'll get around the daycare aspect of school, but you'll see a big pullback away from the indoctrination that public schools put on, at least in America, on the youth in America. And hopefully you'll see a big swell of private schools. Now, regardless on whether or not you see this as a society, those who individually choose to go to these private or personalized school systems, they will just become much more profitable than those who go to universities and public school. Lambda School is one that I support, and I've supported them immediately when they came out. Another one I caught early on. And Lambda School, you go to school for 1 year, you pay $15,000 to $30,000 depending on how you do it. You can get a loan, and you pay, a free loan for $30,000. And if you don't get a high-paying job, then you don't have to pay off the loan, or you can pay $15,000 up front. And it's a complete school package. This is another thing, older people as opposed to young people recognize. Not only do they teach you the programming, they teach you like how to behave in the work world. They teach you how to communicate in the work world. They do all the job hunting for you. They set up all of your interviews. They teach you how to interview. They teach you the behaviors that you'll need to succeed in the job, as well as the skilled aspect of programming. and Lambda School takes people from all sorts. A year later, you're guaranteed to get a job, 50,000 plus, and if you don't, then you don't pay them anything. So you're seeing a lot of people who were gas station attendants and fast food workers go to Lambda School, and then after 1 year, they're making 100,000 plus. This is a very common scenario, and over time, you can imagine all the forces against Lambda School. Every single university, every school, every single teacher in America, public school teacher in America, administrator, every government official who wants the public to believe that without the government, schools cannot exist. So, and then of course all the news agencies, and people think, oh, news reports the truth. Well, there's advertising dollars that the universities spend to have promotions in the news. Lambda School does not have a similar type of advertising dollar. And so you're going to get a massive amount of negative press, and that's exactly the type of growth company you want to invest in. But Lambda School is one that's coming up, and then you can sort of think that law and order might become the police system. People might get disgruntled with the police and legal system. That's probably 20 years away though. The voting system, you might see some more forms of like privatized voting type of systems as opposed to the republic that the US has been in. This is largely what Bitcoin 1776 is trying to address, a new type of voting system. And then hospitals. Hospitals is another area where the costs have just become outrageous, and as opposed to making more regulations with government, having a new person, a new boy start up who drastically reduces costs by encouraging some kind of a community healthcare system, that's another growth opportunity. And this, when you think growth stocks, these are the type of opportunities you want to look for. And then the third thing I look for when I do growth investing is I look for a CEO or the leader who's kind of been put through the ringer. So there's, and has a network. So there's kind of some people who, it's the first company they've ever started. That's going to be difficult to invest in that CEO or to believe that their first company will be successful. If it's like their fifth company that they've started, which is common, then I'm going to have a lot more belief in them. Like Elon, when he started Tesla, he had already been mildly successful at PayPal, even though he kind of failed at PayPal. Peter Thiel took it over and made it very successful. But he was successful with PayPal, and he profited the most from it. So that is a big factor in that. His execution at Solar City was not super hype, but with Tesla, you could tell that his execution was, especially in the later years, getting on point. SpaceX, very much on point. That's another growth opportunity. Space internet is going to be huge potential. Space travel for private citizens is going to be huge. Space colonies and so forth. So something that's largely government regulated becoming deregulated, or open market. But anyways, so Austin, who runs Lambda School, I have a lot of faith in him. This is like he refers to himself as penniless when he started Lambda School, but the guy had written a book, he promoted the book. He has an extensive family of other entrepreneurs to fall back on, similar with Elon Musk. And even though you might not want heredity to play a part, people who have families of entrepreneurs are circles of friends who are also entrepreneurs, successful entrepreneurs. The chance that they'll be successful when they start a business is just 100 times more than the first generation entrepreneur. It's such a challenging thing that nobody gears you up to do. It's just a huge challenge. And so if there's someone who has had some history of prior success, if they've been sort of through the ringer before, but they have a network to fall back on, if they have enough money to where they're not broke if the company succeeds or fails, then that's something with that right drive. I don't really like the overly passionate, like Elon always says that he's saving the world with the climate change stuff. I don't really. You want to have that story, but I don't want that to be the reason that your company is going to be successful. Like if Elon fails, the world doesn't melt. Someone else creates electric cars. You know, there's always someone who's going to do it eventually. He's just going to do it a decade faster than someone else. So you don't want to emphasize that, like, if your company fails, the world is going to crap. That's not a good angle to take. But you want someone who has some history of success and trials and tribulations, so that mostly they don't blow their budget in the first 2 or 3 years. They allow for a 5-year runway, as people talk about it, 5 years to get their, 5 to 10 years to get their company up and moving. And then you want a growth industry, which is primarily anything that was government regulated, that technology allows for the deregulation of it. And then you want, I said 3 things. I forgot what the other is. Growth industry, which is deregulating, a CEO who's been through the ringer, and, I'm just going to call it at that. So, and something that people are socially involved in. People are socially involved in going to school. They're picking their school. They're socially involved in picking their monetary system, their mode of transportation, and their energy usage, the legal system, the political system, the healthcare system. All these things have like huge potential for social involvement. So those are the kind of growth. I don't want, there could be a revolutionary chair or something, a new way to sit in a chair that might make a company a whole ton of money. But I can't imagine people becoming passionate over a particular chair as frequently as they become passionate about climate change and so forth. So yeah, that's a little bit about how I pick growth stocks, and that I'm going to recommend roughly 25%, which I know is a huge percentage, but I'm going to recommend roughly 25% of a portfolio devoted to growth type stocks, which for stocks that are traded on the stock exchange might be Bitcoin and Tesla as some examples of growth stocks. Maybe the bulk of the gains have already passed, but 25% annualized gains might be very normal for those types of stocks. Okay, and that pretty much wraps up all my, the bulk or whatever of my investing and strategies. And I hope you like it, and good luck to you in your future. Patreon, you can check out my Patreon. I really appreciate it. Help me making these videos, or join the Bitcoin 1776 newsletter. All right, that's all I had. Take care, and bye-bye.